Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, May the 4th, year 2020. Let's talk trading. Weekly opening gap. Usually I do these on Sundays, but I was busy doing other things. And remember, fellow traders, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. And when you're trading, each and every trade, always have your risk management in place. And that's the amount you're willing to lose per trade. And you put your stop loss in, make sure your position is sized accordingly. And for brain management, remember, no FOMO and no ROMO, because the pain that you experience when you're in a trade does not come from the market. It comes from your reaction to the market. So you need to work on your brain. In fact, there was a trader video on the Trading Nut, the latest one. The guy said that trading is 95% psychology. And the percentages don't really matter per se. I think what matters most is that you focus on the psychology, because your method, once you have your method, that's fixed. You're nothing more than a trained monkey. You have your risk. That's a simple calculation. You put that on each and every time. That's what the trained monkey does. And so what happens is when you stop acting like a trained monkey, that's the problem, is that your brain goes on tilt. You don't do what you're supposed to do when you're supposed to do it. So here we go. The pound dollar for the week. You see we got a gap down. You can see that big gap right here. And that's the weekly pivot. So you can see we're 62 pips below the open. We didn't even go above the open here. Or did we? By what? A point, half a pip. And you see there's a few other gaps that need to be filled. And usually by the end of the week, these are all filled. So you might want to take opportunity. One of my old favorites, the Euro Yen, has a gap that needs to be filled also. And as we look here, we can see everything is just red, red, red. The day, the week, the month, and the year all red. Of course, this is the first day of the week still, so the day and the week are the same. And looking here on the daily chart, you can see we broke out of the, when we opened, we were down here and we broke the previous day's low, and it's just been downhill. Inside bar, that's the weekly high, so we're in that inside bar for the week right here. The previous day was an inside bar, so that was broken. So once again, these horizontal line trades are paying off. And look here on the month, it's almost like practically every pair is an inside bar trade happening. So you can see right now the pound, we've got the weekly inside bar happening. We've got a monthly inside bar, and we've already broken out of the daily. The range is here 1, 2, 3, 4, 5, 6, 7 above 100. So not much on the ranges so far today. Okay, there's the daily pivot up here. We missed it, and you can see it was just south trading pretty much for the day. And we are in the rat zone. You can see here the smart rat zone is the purple, and you can also see that here in the red rat zone, they're pretty much the same, the smart and the normal rat. So right now you can see 25% of the time price is closed at this level or below, but that means 75% of the time it's closed above. Now we're down to 24. So when I put out that rat video, in fact, there was somebody said I didn't explain the rat well enough. Well, if you go out to my YouTube channel and you type in rat zone, you'll see I've put out, I don't know, half dozen or more videos explaining everything about the rat zone, how I came up with it, the statistics, and why it works most of the time. And remember, these are for educational purposes only. These methods, these ideas I put out, and so you have to make them your own and make it work for you. Because what works for me might not work for you. There's that weekly pivot we haven't hit right here. Here's the monthly pivot. You see we already have taken that out. So weekly pivot needs to be hit. And right here, there's the weekly pivot. There's one down here that hasn't been hit. And as far as the daily goes on the pound, the daily hasn't been hit. So that needs to be taken out. A couple misses here and a miss up here. Wick zone, just straight out of the wick zone. In Wall Mall this hour, as you can see, there was a break to the upside. And the way Wall Mall says is you don't take the first break. So he wouldn't have taken that one. He wouldn't have taken that one. This one he would have gotten burned on. This one here, it could have been a scratch trade or a couple pips. Here's another couple pips. And here's a McGilla trade right here. And you wouldn't have gone short here because that's a green candle. So, or it's possible you may have gone short. I don't know. We'll have to get Walmall on the line and ask him how he would have traded that. A lot of times, I'll look at this irrelevant, or the candle color really doesn't matter, and just trade. Hey, if price is going down at the line, it's going down because you can look at H1 or you can look at M1, and depending on what you're looking at. So here, there's a red M1. And you'd be going with the H1 candle color. And so that could have been a profitable trade. So it's just something to keep in mind. And once again, you make this method your own because this is just the sweet spots, just a standard price action trade. But Walmart turned it into his own method by applying what he saw every hour along with his money management. And here we go on the map. This is the euro. It's making a low, so there's an opportunity. Oh, and if you're wondering, I updated the TRO ranges indicator. Over the weekend, I had an idea. I was just using some code from another indicator that I had already put in, but I made it so you now have options. You've got high-low, high minus open, high minus close, close minus open, close minus low, open minus low, high minus the previous low minus the low. For these two are for breakouts. And then for the previous mid traders, high minus the previous mid and previous mid minus low. So the people taking those crossovers. So you can display any of those. And also, the other thing is, why I even coded it was now you can put multiple instances of the indicator up by just giving each instance its own tag. There was a trader that asked that. So I'll be posting that sometime soon, I guess. Out there. I'm trying to remember. I don't think there was really any other questions. Oh, there was one trader asked me to update the TRO, the 2017 dashboard, the TRO dashboard, and he wanted the Heikin-Nashi candles and their Heikin-Ashi candles. He wanted to know if they were saying up or down or blue or red or however you color code. So I added that function. It was pretty easy because I had a multimeter TRO, multimeter HA. So if you've got my TRO build 1000 or build 1200 zip file, I guess I should rename it to mother loads. It would be in there, and that's a freebie. Actually, they're all freebies, just some are donational or not. Anyway, so that's what's happening here. I don't think there was any other questions hanging out there. As you can see here, that wall mall trade, through the 30, it went now through the 20. I think price is somewhere near the low here on the map. It's here 14. So definitely green rats are probably looking for an entry here. You can do a rat reversal. You can just wait and go on a green candle to come out, or you can just wait and go long at the 25. And you can see here that's already paid off a few times if you're just scalping, as opposed to trying to go for those Magilla trades. In fact, there's some traders and people out there talking about making the hundreds of pips. I guess I am just not really that good at making hundreds of pips, because price just chops, and you just watch your P&L go from red to green, red to green, red to green, and it's kind of like I'd rather just take some green, take some cheese when I can, and then wait for another opportunity. And sometimes you might take a quick 5 pips and you leave 10 on the table, but that's just trading. I mean, sometimes you have a daily goal or weekly goal or monthly goal, but no matter what your goal is, they all have one thing in common. That's to make money rather than lose money. So right here we can see prices moving up through that rat zone right here. So you can see here, had you taken these entries here in the smart rat zone, you would be up a few pips. And that's, and based, once again, based on statistics, 80% of the time, price is going to close above this level, whether it's a pip, 10 or 100. And that's how you use these statistics. So you see here, 32% of the time, price is going to close above this level, or 64% of the time is going to close below here. Why these don't add up to 100? It's very simple. This is a different calculation than this. So we're calculating it being beyond this zone. So between here and here is about 20 pips. But between here and here, I'm not even sure how many pips that is. Maybe I need to put that out here. Let people know exactly what that smart rat zone is. But it looks like 17.4. It looks like it's only 13 pips. So that's why these numbers don't add up to 100. Just in case you're wondering if my math was off. No, it's not. So that's about it. I can't think of anything else that was on the table. But really, the brain management series, we'll still probably put out another video or two on that, because it's just really, really key that you look at it. As you can see here, price is now dipping back down. So once again, do you take the profit? Do you try to ride it out? And if you're in a losing trade, then if you are experiencing pain, it's because you're reacting to the market. Because if you have your stop loss in there and you followed your method, then it shouldn't matter. If it stops out, that's okay. You followed your method and you're not going to win every trade. So you did what you needed to do by placing your stop and getting stopped out on the trade. On the other hand, if price goes up and you're feeling all giddy and you're like, ooh, I'm going to make a lot of money, and you're starting to place that order for a Ferrari or a Lamborghini, you're doing it wrong too. You should basically have no emotion. It's you go in, you do what you're supposed to do when you're supposed to do it, and the results are just the results. You don't really have to react to them, because once you start getting attached to a result, that's when you can easily go on tilt. So, fellow traders, as you're trading this week, just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you're new, come down and click subscribe and click the bell to be notified. And everybody, please click like and then share the video where you can. TheRumpledOne signing out.